Hello, ORAT Nation. Today is Monday, March the 4th. This is the video I was supposed to do yesterday, and that actually had technical issues, so I am doing it today on Monday. I want to talk about some of the indicators that I use and technical analysis in general for those. I've had a few questions from people about trying to learn some of these things. So I want to take a few minutes and just show you what I use, some of the ones that I use. There are others, of course, but I'll give you a good overview of some of the ones that I use. And if you have any questions, please let me know. Send me an email or leave it in the chat box at the bottom. Let me share my screen and we can jump into it. For those that would like to join my newsletter, it's right here at breakpointtrading.net. And you just click on this button to get the free newsletter. Or you can sign up down here with your email. We don't share emails or sell emails, and it doesn't ask you for a credit card. This just allows you to get notified whenever the newsletter is available. Or if you want the rest of the content, then there's an annual subscription of only $99. So let me quickly, first I want to show real quick the status of the market and timing strategy. So this is something that uses one symbol, in this case, QLD, which is the 2 times leveraged NASDAQ. So 2 times the triple Qs. And I want to show you the long term because this is what we're going to kind of end up with when I go through this exercise. So this is what the signal looks like. So it's, in this case, March 13th is when it gave the buy signal, and it has not yet given a sell signal. So I'll explain what all of this means here in a second. But if you want to track this, or if you actually want to participate yourself, you can see right now, coming up on 1 year here, probably next week, 116, almost 117%. The market's down slightly right now, so that might be a little lower at the end of today, but this gets updated every day. So this is the status as of Friday. So keep that in mind, what that chart looked like, because that's what I'm going to explain. So let's start with the Elder Impulse System. These are the bars that I use. I don't use them all the time, and I want to make one thing clear. There is no right or wrong with technical analysis. It really is what you're comfortable with, what you're used to seeing. Different people will use different indicators. I don't recommend trying to put a lot of them on one chart, and don't put ones that are redundant because they're going to give you the same signals. I'll show you the ones that I use, the ones that are my favorite, and I'll show you different ways that you can use them. But you can come up with your own. You can experiment with other indicators, create your own charts. I highly suggest doing that if that's what you would like to do. Again, on my website under chart lists and scans, I provide you with a whole bunch of chart styles that I use. There's a 65-minute, 3-year, so different ways of looking at it, Bollinger Band squeeze, different ways of looking at all of this. But I'm going to show you my standard one, which uses the Elder Impulse System. Now, this was created by Alexander Elder, and he has a few books written on this. He uses a 13-day exponential moving average and a MACD histogram. So by using these two things together, keep that 13 in mind because that is important as well. But by using these two things together, it can identify trend. That's what the moving average does. And the MACD measures momentum. So as a result, it combines both trend and momentum in a single view, a single bar that's color-coded. And the way these are color-coded is, so you can see here for the 13-day and the MACD are both rising, or both falling, I'm sorry, then the bars will be red. And you can see down here the MACD is falling and the moving average is falling. If both of them are one of those two are different, so in this case the MACD is rising, but the moving average is still falling. So one's falling and one's rising, these become blue. Same thing the other way around. If the moving average was rising but the MACD was falling, these would be blue. So these are considered neutral bars. And this is what I use on my early warning system on my website. So when these turn blue, that's neutral. When they're red, that's bearish. When they're green, it's bullish. So green means both the moving average and the MACD. And you can see right there, they're both moving higher. So that turns the bar green. So that's important. The other thing that they talk about down here is the 65 days. So if you take 13 and multiply it by 5 days for the week, then you get a 65-day moving average, which is basically allowing you to see a weekly view at the same time you're seeing a daily view. So I've used this as well, and I'll show you how I use it in mine. So that's the impulse system. And down here, the impulse system encourages you to enter cautiously, but exit fast. This is the professional approach to trading, the total opposite of the amateur style. Beginners jump into trades without thinking and take forever to get out, hoping and waiting for the market to turn their way. So these bars will hopefully get you in slowly, but get you out quickly when they turn red. And I'll show you how I use them. Now, the other thing that I use is also by Elder, and it's called a force indicator. And what the force indicator does is, by the way, this is Chart School on stock charts. So if you want to learn about anything related to technical analysis, and it's free to do this, you can just go to Chart School. So the force index uses the same idea, uses the 13-day, but now it incorporates volume as well. So it looks at the volume in association with these Elder bars, and it will show you the force of the move based on volume. So down here is a 13 period. That's the one that I like to use. And it actually shows the force of the move in addition to trend and momentum, which is what the bars do. So by force, we mean how is volume playing into the trend and momentum. So if there's a lot of volume, then the force will be much higher. So I use that as well. I'll show you that here in a second. So let's put all this together now. And I'm going to start, I'm using Palantir as my example. And I'm going to start with just the bars. So this is what it looks like up until Friday. This does not incorporate today's, but we'll look at that at the end. So you can see here, the green ones are momentum and trend rising. Blue ones are neutral. Red ones are both momentum and trend falling. So you can see there, it kind of shows you very quickly the colors, green, blue, as it's moving sideways through here. Right now it's blue moving sideways, so that's indecision. You don't know which way it's going to go right here. And it also kind of shows you visually where the resistance and support is. So that's what I want to do first. And this is the basics, the very fundamentals of technical analysis, just identifying support and resistance. And you really could use just that and nothing else to calculate your entries and exits. We're going to use that same chart, but we're going to step through it just as if we are looking at the market on a day-by-day basis. So if you notice at the bottom, Palantir had been falling for quite a while, and I actually drew in where I would identify the support level at, because we got red bars and then a blue bar, and then we started getting green bars. So it's starting to rise. So that's support right down there where it stopped falling. So as we move forward through there, and if you watch that, you've got a red bar right there, another red bar, but then it turns green, blue, green. Now it's starting to rise again. And now we got a red bar, and we don't know how far that's going to fall, but it's starting to rise once again. So we get a few reds, but in general, day after day, it seems to be rising. It has not come back down to the support level. So far we should be okay. But if we're looking for an entry point, we haven't really found a good one yet. So you can see right there, we've got red bars, and this is the peak that it hit right there. So we're starting to draw a resistance line in. And we continue to go down, and the red bars continue falling. They go down right back down to that support level where we were before. So now we need to see if that support's going to hold, because if it drops through that, then there's a lot more downside to go. But if that really truly is support, then we should start seeing blue bars and green bars as it moves back up. Now, right there, you can see that on a green bar, it broke through resistance. That's earnings, most likely. And that is the signal to get in. So there's the buy signal right there. And you can also notice the volume right behind it is extremely high. So that's the entry point right there. So now we've entered the trade. Now we need to understand where to put our stop to make sure we don't lose too much money. And initially, I usually just use a 7% stop, but hoping that it's going to continue to rise. And we can see that it is continuing to go up. And now this support, that resistance line that we had before is now a support line. So we got a blue bar. It's not red, it's blue, coming right down to that support line. We don't know if it's going to drop through it yet or not, which would take probably execute our stop and we'd be out of the trade. But instead, it didn't. So that support held, and now we're getting green bars and it's moving up really quickly. So now we'll just watch it as it continues to move higher, greens and blues. So the trend is very positive. Both trend and momentum in general seem to be rising. Now we're getting some blue ones. So indecision, there's some profit taking going on through here. So one of those, either momentum or trend, is starting to decline. Now there's another green bar, another blue one. Now we get a red one. So now they're both declining. So that's where profit taking looks like it's starting to happen. But right now we have our support level down here, and we probably have not moved our stop. We might have moved it right up to the support because it's so far above it, but we haven't moved it from there yet. So the stop is still down there. Now we've got a new resistance line and we have a new support line. So let's see what price does with these levels. It moves up to resistance and takes it out. Now it's moving higher. Okay, so now we'll see if it's going to continue. Now there's a red bar. Now it's starting to come back down. We have to see if that support level is going to hold. And it looks like it's going higher now. So that's great. Now we're getting some blue bars. So that looks like at the maximum. So we created a new resistance line up there. And now it's starting to drop. And we have to see if that support level is going to hold or not. And right now it comes right down to that support, but it looks like it's starting to rise off of it. Again, it hits support, starts to rise off of it. So that's where the orders are. Now we've got some green bars and a red bar moving sideways. At this point, I would move my stop up to probably right around this level right here, right where this, right below that bar, which is just below support. So now we've moved our stop from here up to here, and we'll continue to watch to see what the price does. So now it's continuing to move higher and then lower, higher, and lower, right back down to support. And let's see if support holds. So that's where the buy orders are. If you get a support level like that that keeps getting hit and continuing higher, that's where all the buy orders are. And we have our stop just below that, remember. So now it's continuing higher, going higher a little bit more. Now it comes back down to support. Will it hold? And right there, we get a big gap up on huge volume and a green bar. So there's the next earnings. So at this point, we could either add more right there. Remember, our stop is still right down here. We could add more to it there, or we could wait for it to break resistance. So let's see if it does break resistance. So after earnings, it's continuing higher, right at resistance. And now it breaks through. So if you wanted to, you could add some more right there, or you could add more at resistance, but keeping our stop for the whole thing down here at this major support. So now it continues. Now it's going down a little bit. So we have a new resistance line going down some more. Now it's moving sideways. So now we've got a new buy zone. So now we've got another little resistance right there. Let's see if that holds. And we drop through resistance. Now we've still got to see if we go down to our major resistance, but we don't. We start heading higher again. And kind of going sideways into this period. All right, so there's another gap up right there. So we have a new support level right there that it seems to be respecting. So at this point, we can move our stop up to just below this lower bar right here. So remember, we've moved it up from here to here, now to here. And now we'll see what the price does. And there's another earnings right there. Another gap higher, it breaks out of resistance. So that's really good news. Everything's looking great. Keeps on going higher. Now we're getting close to where we are right now, current day. And we've got a resistance line right up there, and it seems to come down, moving sideways. Blue bars again, quite a few blue bars. And looks like that's where we are right now. So we would move our stop up to just below this support line right here. Now, the price has moved all the way from down here all the way up to here. So that's quite a big move, even though we've consolidated quite a bit through here. So we've got a stop level right up here. So if we get taken out at this point, it's a really nice. In fact, I think it was about $7.50 or maybe $9 down here. You can actually look at it. We move this all the way to the right. Let's see. Well, I don't have it. So that's where we are right now. So pretty good profit, and we're protected by moving our stop up. Now, let's take a look at this in a different way. So there is the support and resistance, and you can do nothing other than that. You can just use support and resistance for your entries and exits for moving your stops. That's a very effective way to do it. That's the basics of technical analysis. But let's add something to it. Let's add that force line that I talked about before. That also by Elder. So we still have those support and resistance lines there. And that's what it would look like. So could this tell us then where our potential entries and exits might be? So the entry is still over here, same place. But because this one dropped below the zero line, we might want to exit. If we want to be more conservative, we might want to exit there, and then we re-enter right there. So basically just about the same price. We really haven't lost too much, but we protected ourselves and we don't know that this support line is there yet, because we need at least 2 touches to confirm it. So we got out and back in right there, just using the force indicator. So we're in right here. We got out right here. When this goes up and down, there should actually be a red line right there. And then what goes above the force, so we're back in there. We're out over here. We're back in here. We're out over here and back in again there. So 1, 2, 3, 4, 5 trades across this year. The other one had only 1 trade. So keep that in mind. Just using support and resistance only had 1 trade, but you have a much further way. If it breaks through this support line, then you've lost a lot more rather than just getting out whenever these things give you the indicator. So let's add one more thing. Let's add to the bottom a long-term MACD and a 65-day MACD. Now remember, 65-day shows you the weekly. Now we're going to use this instead of the force indicator. And you can see this is where the force indicator was right here. But if we're using the one below, we will take these out because it didn't break through right here. And this one didn't break through either. So we took all of those trades out. Now we've got 1 trade between these 2 time frames. These over here would be the same because that went through, those broke through. So we wouldn't really change anything there. But you can see in this case, we've got 1, 2, 3, 4 trades through the year. So what if we then added moving averages? So these are the typical moving averages I like to add. The 5-day, the 21-day, these are exponential moving averages. Anything from 50 or higher, I use a simple moving average. So the red one is a 50-day moving average, and the gray down here is a 200-day. So now we're going to see, and what we see right away is that using this indicator down at the bottom actually gives us signals at almost exactly the same place where the 5-day crosses the 21. So on my market bias and also on the market timing system, I show an early warning, and that's when the bars change. So when they change from blue to red, that's a bear. When they change from blue or red to green, that's a bull. And when they change to blue, that's a neutral. So that's the early warning. The short-term signal is when the 5 crosses the 21. And you can see in this case, it crosses at the same places that we already had. And then the medium-term signal is when the 21, this green one, crosses the red one. 21 crosses the 50. So if we use those, you can see it's a little bit more conservative. However, you also get in later and you get out later. if you use the medium-term signal. But it will help you make sure that you're on the right side of the trend. And then the long term is when the red one, the 50-day, crosses the gray one, the 200-day, which didn't happen only once way back here in April. So all through this period, the long term is still bullish. All right, so that's what it would look like with the moving average lines included on it. Now, in this case, you know, we could move these moving averages over to the medium term, and then we would get out there, we would get back in there, we would, then these two would be gone because the green didn't cross the red. Then we would get out here and we would get back in a little bit later right there. So now we've got 1, 2, 3 signals if we're using the medium term instead of the short term signal. All right, so that's using moving averages. Then finally, if we just looked at if we took the 65-day off of the bottom and only used this long-term trend, in this case, what would happen is, again, we would enter and exit sooner and later. So we would enter back here. We would not exit on this one because we haven't breached. Now we do have the support line. We haven't breached it. So we don't use this signal down here. We ignore that. We also are still in the red right here, but we haven't breached the support level. And then we would get go to cash right here just for safety's sake, because we're red up here. This has gone down below. And then we would just hold to here and get back in again. So in this case, there's only 2 signals. All right, so that's using all of those components that I usually have on my chart. And you can use them any way that you want. Depends on how aggressive you are, how quickly you want to get in and out, or if you want to stay in for the long term. Now, if you want to use a really long term and use what we use here for the market timing system, which is this long-term signal right here. This uses a weekly 40 EMA and 50 simple moving average, 40 exponential and 50 simple. That's what's used right there to give the signals for this market timing strategy that has produced so far almost 117%. So you'll have more downtrends that you have to live through, but in the long term, you'll actually have a much better performance. So let's look at what that would look like here. In this case now, instead of using a daily chart, I'm using a weekly chart. So we're using a weekly chart. We're using, instead of a 21, we're going to use a 40 down here. So there's the 40. In this case, you can see where the support lines are. These are major supports now because this is a weekly chart. You can see down here, this is in May, where the signal down below crossed over. So that's the entry point right there in May, rather than back here. I mean, you could also identify one when this red turns to green and you get a green bar above it. That's potentially an entry point right there. It's not as confirmed, but you could have entered back there in February also. But there are no sell signals. So in this case, there's only one trade using a weekly chart, using the 40 and the 50, and using this MACD histogram at the bottom. So in this case, we get in right here and we just stay in. Even when it goes up and comes back down and bounces around sideways through this period, goes back up here, and we're right at resistance. And by the way, this chart right here, I think, does reflect, this one might reflect. This is QLD, but if we look at PLTR, so this does reflect today's action as well. So a little bit lower today, but in general, the 40 and the 50 is still showing a bullish trend. So that's the way I use those indicators. I haven't talked about some of the other ones, but we'll say that for another time. If you guys like this, I know this is a little different from what we usually do. And if it's something you're interested in, I will continue to do these educational kind of sessions. And maybe this is actually what I'll do on my YouTube channel when I set that up at some point here in the near future. So I hope that was useful. And interesting for you. Let me know if you have any questions, and have a great week trading. By the way, this is March, so market is down, but only slightly today. So we'll see what the rest of the week holds. All right, take care. Talk to you maybe Wednesday for a midweek update. Bye.